Alright, Reitmans, RET, Toronto Stock Exchange. What I have here. Let me check something out. RET at Reitmans Canada Ltd. And monthly candle chart. Wow, what happened here, guys? Look at that, beautiful. I love my chart trading framework, guys. Monthly candles. You see all this noise, all these wicks. Could go on badcharts.com, check my how-to, but all this is noise. The real breakdown line is this level right here, whatever it was. 1490. That was the breakdown line. All here on the weekly, you might have had false breakouts. On the daily, you might have closes below that in those wicks. And that's a massive top, guys. Learn to recognize. And what was the target? Look at that, man. That was reached so fast. So what would I have done? This is the greedy target there, the furthest away target. And this is the closest target. The launching pattern sharing the border with the bigger pattern has a higher probability of reaching its implied measure move. And sometimes if it's a smaller pattern, it just happens in the breakout candle itself. But I trust most those breakouts when I have a consolidation pattern on the break that shares a breakdown line than just a thrust through a breakdown with like a parabolic there. So it just you wouldn't have this consolidation. It would have just went straight down here. I trust this a little bit more here. It evaporates whatever sellers you have under, and if the price goes down, buyers that you have under. If the price goes down, that means it's just sellers and less buyers until you start hitting these pullbacks. I would have entered here at the close of this candle, sell stop here, target here, and then just move on, do something else. Read the news, go play, do anything else, and just wait. So these are bracket orders. Here's my sell stop, my profit limit, or my buy stop. Whichever gets triggered first, the other one gets canceled. So 1 month, and then 2, 3, start to panic. 4 months, 5 months, 6 months, 7 months. 7 months later, target reached. And that's it. And that's why one of the advantages of Stan Weinstein is, instead of implied measure moves, he does have the swing rule in his framework. But most of the time, you're able to write a stage 2 for most of its length. So we'll have to look on the weekly how this looked like. But if it went down and you didn't have any sell stops that got triggered as you move them along the way, then you could have rode. You would have entered close here to the stage, the breakout here, and you would have probably exited all the way down here. So that's the advantage, disadvantage. All frameworks, everything has advantages, disadvantages. Doing chart trading frameworks, then if you reach your target, then after that, what you have to do is you play those next targets here. Applied measure move, breakdown, added to breakdown line, another flag, sideways pattern, same thing. Applied measure move, added to breakdown line, etc. And then after that, you just forget. All right, I'm doing a whole bunch of lines. What am I doing? All right. Where are we today, guys? This is why this got my attention. I picked up a RET off, again, screener.nextbigtrade.com. Having fun going through the tickers, selecting stage 2s in there. And just going through the list, clicking on the W for the weekly chart. And this one caught my attention. All right. Let's define the monthly defined support, 383. Monthly defined breakout. Right now it seems to be here at 474. Guys, there might be one right here. But this is low. This is like, remember, first breakout. The target of that pattern. Make the price action reach a previous resistance. After that, second breakout out of that bigger pattern. Make you reach maybe a target off a bigger pattern, previous resistance. And after that, the chart morphs and morphs. And after that, you have a third breakout eventually out of a bigger pattern. Its implied measure move going up. It's fractals, guys. Patterns within patterns. And you could have a stage 4 on the monthly chart. You zoom in and you could have stage 2 on the daily chart. Very possible. So that's why it's important if you're playing daily or weekly, always go up a time frame or two and make sure that you have the higher time frame in your favor. All right. So right now I know there's some action on the weekly right here. Price action is going towards that 474 to test. Ideally, we want a monthly candle close above 474. And that's going to be our base and our implied measure move. Add it to the breakout line. Bring me right here. 569. Sounds good, right? Monthly candle close above 474. Implied measure move. Let's get more precise here. Whoa, just like that. Just like that. Okay, let's do it like that. And my other concept of target considerations, always take the least greedy target. So if ever you're not sure about the arrows, instead of extending them, just shorten them just a little bit. Sure, you reduce your risk to reward in your favor, but you also increase the probabilities of reaching that possible target. In case that further away target never got there, ran into some resistance, etc. Target consideration, guys. All right, let's go on the weekly. Whoa, what? ADX. Remember I used to do the ADX in my earlier Secretwars? And I was just fiddling with the thought of using that as a screener. Anything under 20, I know that means you're in a stage 1 or 3. And after that, when you're going above 20, then you know you're in a stage 4 or 2. So right now you see that this is the volatility or average directional index, I think. Range, true range or range. Never quite sure. And now it's winding down. That means the price action is getting tighter and tighter and tighter. Let's close that. What do we have here, guys? Okay, so on the weekly, we're breaking out right here. So this is the first breakout. I like saying now, I trust most second and third breakout, and you'll see why right here. This is embryonic, so we're catching the first breakout of the base. We saw on the monthly that we need a little more price action to have a bigger breakout. Here's the monthly defined resistance. You see all this price action above the monthly defined breakout line. Those closes, those are it's the wick. This is all the price action of the wick, and the wick of the monthly candle chart closed below that. And all of this would have been false breakouts, guys, or false signals. Respect the close of the monthly candles. What else do we have here? 30-moving average is still going down. We don't have the volume yet. Wednesday, Thursday, Friday. I don't know if the volume is going to spike to get 4 times the average. It'd be kind of cool. It'd be a very constructive, even if we're not going to... It's the first breakout. We don't want to enter right there. You have the RSI going up. So this is the first clues I start noticing that has a potential of becoming a nice stage 2. So this is the embryonic Price action now is going to stay above the 30-week moving average. It's going to start flattening out, and eventually it's going to start going up. Ichimoku cloud defined resistance. All this red cloud, guys. So you have monthly defined resistance. So here it could probably pull back. Price action might go up here. Maybe go a little through, but get sucked back in. Go back down the breakout line. So now you're going to start looking for clues on the health of the stage, possible stage 2. You're going to look for contracting volume here on that pullback. Time's moving on. The cloud's thinning out. And then after that, you might get another go. And then you get that close above that 475, 473 above here. You're going to look for it. Now you're going to look for crescendo volume, maybe on the candles going up here. And then on breakout candle, you want that crazy volume like that. The RSI probably going to go down here when you're contracting on the pullback. And then you'll have the RSI going back upwards above 50. So that's my imagination, guys. It's pretty fertile, but the more you visualize the future or possibilities, when they materialize, then you're ready, and it just becomes instinct to you guys. It's a practice. It's a practice. At the beginning, when I was trading, I was pretty much reactive and just panic, fear all over the place. Hang on to any word on the forum of somebody that posted something that would justify my position in that trade, and anything that was against the position of my trade, I just say they were trolls or whatever. That we didn't quite use the word troll back then there, but it was kind of weird, full emotional state, full no rationale, it's just emotion when you think about it. And miracle, I did not lose all my NAV. A miracle. And now with risk and money management, even if I make mistakes, emotional mistakes, and not respecting my framework, or just trades not panning out, it's okay, guys. It doesn't hurt. You lose 1% of your NAV on a trade. Big deal. You have 100K, that's 99K left, guys. Lose 10 in a row, man. That's a lot of trades to lose in a row. You're still at 90K. You're a long way from wiped out, guys. Long way from wiped out. You don't go in panic mode. So that's pretty cool. It's a cool feeling, really. It's like very comforting. So Reitmans, you're trying to break out of this base, which has kind of been there for a while. January, November, wow, if you don't count this high. So this big base, man, is really forming. It's been there for a while there, about 2 years, 1 year plus. First breakout right here. See how it pulls back here, or if it doesn't pull back, sideways move maybe. Close to that breakout line here. And then secondary breakout right here above that breakout line. And that's probably where we're going to enter, guys, when we're above the 473. We have the monthly defined resistance breakout there. That nice bottom pattern giving a target all the way up here. And us will be out of the Ichimoku cloud, guys. It'll be all glory for us. It's going to be awesome. And here, that target here, I'm going to hit that resistance, previous support turn resistance, what I call a wall. And again, price action might get here after the secondary breakout, pull back towards the beginning of the secondary breakout. Remember, within 1 to 3 months, we get pullbacks usually on the stage 2s. And if it's on low volume, then you're good to go, guys. And then after that, continue, and so on. All right, Reitmans, a little early, but this stage 1 giving signs that it wants to be a stage 2. All right. See ya. Ciao.